Hi everyone, today let's talk about Iran attacking Israel. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So Iran has officially attacked Israel with a drone strike. They also commandeered an Israeli vessel. Technically it was a Portuguese vessel that happened to have ties to Israeli businesses. And really I wanted to highlight this because it is a geopolitical risk. So there's obviously going to be effects on things like oil prices. Oil prices are definitely going to go higher, at least in the short term. Whether they stay higher or not obviously remains to be seen. And I think it depends on whether this escalates or not. I don't think Iran is going to be sending ground troops. It is a long way away to try to get to Israel. And also the United States did move a carrier group towards Israel and say that we would help defend if necessary. And they mentioned here it involved 100 drones, dozens of cruise missiles, and dozens of ballistic missiles. So it wasn't just drones, quite a few missiles also. It's hard to tell exactly what the difference between the two are. It seems like an explosive drone is just another word for missile, but the main highlight here is that this is going to create some geopolitical uncertainty. The question is, how much does this affect the US? Is the US going to get involved? Will this continue to escalate? Will any other world powers get involved? They seem to have some ties to Iran and potentially China as well. Are they going to get involved? And anytime there is risk like this, markets tend to dip due to the uncertainty. And once it gets resolved, then we see a rally back to whatever the levels were prior to that move down. So something to keep in mind, could potentially push markets lower on Monday. Moving over to fear and greed, you can see we finished the week at a 46, which was a pretty substantial step down. We were up in the mid 70s for a long time. We got there in mid-December, and then we broke down from there here at the end of March. And now we're all the way down at the 46 area, so pretty significant step down, almost into fear. Most of the indicators are still hovering in greed though. Momentum starting to pull back. We're nowhere near that 125 moving average, all the way down at almost 4,800, but we are all the way at 5,100 right now, so still a long way down. Strength still in greed, breadth still in greed. Put call ratio starting to get up there a little bit. Maybe we'll look at that one later on the charts. VIX absolutely getting elevated, finished up around 18. Big wicks higher on the day, and then looking at safe haven demand back into extreme fear. People starting to buy into bonds and get out of equities. And then junk bond demand still hovering in there really strong at that 1.6 spread. Moving over to the sentiment survey for this week, you can see we stepped all the way down to a 43. Neutral widened out to that 32 area, back in line with historical averages. Bears only stepped up a little bit to a 24 from a 22, so not a ton of bears coming in. Remember, this happens on the Thursday session. I would guess this is going to step up pretty significantly into next week. Still a lot of bulls in there, but you can see the bulls are pretty steadily declining from that peak at the end of March. Moving over to the seasonality chart, you can see we did get that pretty low bottom here for the 12th. The question is if we get that bounce and rally up to the 16th. So far, seasonality has held pretty well, and if this trend continues, it should be a bullish rest of the month. It's a little bit hard to tell because we did have some geopolitical risk, which definitely seemed to spook markets into that end of the Friday session, or it could just be seasonality and we'll see bullishness. So continuing to watch into the Monday session. Moving over to the calendar, you can see it is expected to be bullish on the Monday. That is the tax deadline. Tuesday also expected to be historically bullish. Makes sense based on the charts. And then it's a bit neutral here until the Monday and Tuesday of the week after, up until the end of the month. Moving over to the earnings chart, we did get some earnings on the Friday session. Everybody beat on the top and bottom lines. There was some weaker guidance and banks did move lower on the Friday session. But looking into next week, you can see Goldman, some of the rest of the financials, United Health, J&J, Bank of America. Going into Wednesday, Abbott Labs, US Bank Corp, Crown Castle, fairly interesting. You also have Globe Life with the most recent news announcement about them potentially being fraudulent in some of their life insurance holdings. And then looking at Thursday, you have Netflix. That's the first big one of the season. You also have Blackstone in there, fairly interesting. And then looking at the Friday session, Procter & Gamble, American Express, obviously very important. And I forgot to mention American Airlines here on the Thursday session, always fun to watch. Moving over to the economic calendar, you can see core retail sales coming in on Monday at 8:30. Definitely going to be interesting. We got some more Fed members speaking. We'll see if they continue to be extremely hawkish like they have been. Housing starts, always interesting on Tuesday. Looking at Thursday, you got CPI for the Eurozone. Pretty much nothing else there. And then looking at Thursday, initial jobless claims, Philly Fed manufacturing, as well as existing home sales. And then looking at the Friday, pretty much nothing going on. Moving over to Max Payne, this is a third week options expiration coming up for this week. 4.2 million options already in the market. Put call ratio very high at 3.11. Put wall at 510, which is basically right where the stock is. So probably going to see a little bit of a bounce early into the end of the week. Obviously, it could go lower early and then rally back up to close above that 510 level, but I would expect it to close above 510. That is a big put wall at 84,000 options at that level. Call wall all the way up at 530. Some smaller ones in here at 525, 527, but really between those levels makes sense. Really 515 to 520 makes sense, which does give you a little bit more upside, and you can just see how much options there are in the market. Let's go ahead and expand that out. You can see tons and tons of puts much lower in the market. I don't think we're going to get anywhere near those, but we're already at 510, and I would expect that to hold. And then below that, you have 500, which has way more options, 106,000 at that level. So some really strong put walls. Would expect a little bit of bullishness next week. Moving over to the charts, starting off with the S&Ps here on the weekly chart, you can see we got 2 bearish weeks in a row. We've been on a massive run. We topped out here around that 524 area. That was your all-time high, well above these highs from 2021. And looking at it a little bit closer here, you can see those 2 bearish weeks. We closed below the 9 EMA. So the next one is your VWAP down at 504. Momentum continues to step towards bearish. RSI definitely bearish, breaking well below the SMA. Big volume on those 2 candles, and everything does look short-term bearish here going into next week. And then moving over to the daily chart, seems very similar. You can see this big run. We've had a bit of a top. We've had some pullbacks here. We closed right on the low on the Friday session. Got that 55 EMA there at 507.77. We're right at the level, 509.77 as well. So right in there makes sense. Momentum bearish, RSI bearish, volume stepping up on that selling. My guess is that we'll get a bit of a bounce off of that 55 EMA, and then you'll see this kind of either push to a lower high somewhere around that 520 area, and then we'll see it sell back down into the end of the week. Could even take longer than that, maybe a couple of weeks. We get a little bit of a rally here into that zone, establish a lower high right around 517, and then sell off into the week after next. Certainly possible as well, but I do expect a little bit of a bounce off of this level. And then moving over to the Tasty charts, similar thesis. You can see that selling starting. We're below the 8 EMA, which is at 511.63, quite bearish. Got the 21 sitting down at 493. So you would expect a couple of legs down, momentum also rolling to bearish here. So seems like we're going to get a push down. ATR stop on the weekly chart, 485.50. Seems like this is going to get a little bit more selling in here based on what we're seeing. And then looking at that daily chart, you can see we took out the ATRs on that Friday session. So that's a big change. We've been in bullish conditions on the daily chart for a very long time. We got that flip here on 3 November, bullish conditions, and now we're flipping to bearish conditions. So that's very concerning. Got that 55 EMA at 504.19, and then that lower ATR band down at 503.04. Moving over to the NASDAQ on the weekly chart, again, another 2 weeks in a row of bearishness. We are right on top of that 9 EMA. We technically closed below it at 18,000, 9 EMA at 18,050. Momentum bearish, RSI bearish. You can see last time we flipped to bearish conditions, we did have several more weeks of bearishness, even with a couple of rallies in there. But we're at 2 weeks in a row here. You can see last time we were at 2 weeks of bearishness, we did get a slight pop on those couple of weeks. And then we did get a continuation lower eventually. We'll see how it plays. These 2 weeks of bearishness have been pretty tame at 0.8% and then 0.58%. But in terms of indicators, everything does look bearish. And then looking at the daily chart, similar thesis to the SPY. You can see this consolidation. We've had sideways chop. We're still holding that 55 EMA at 436.50 and the highly traded zone right in there as well. You can see how much volume is happening in this area, and we're not making new highs, so that's definitely concerning. If this 55 EMA breaks, I'm pretty concerned that this is going to move much, much lower, and that seasonality thesis is not going to hold up. Moving over to the Tasty charts, you can see that same weekly chart consolidation. We're right at that 8 EMA, 437.95. We closed just barely above that by about 20 cents. If that structure breaks down, you got the 21 EMA all the way down there at 421.90, right at that first ATR. You can see these are still trending higher, and then the ATR stops are all the way down there at 401, so that would be a significant move lower. That would be around 10% lower, but right now it does look like we're due for a short-term pullback at least. And then looking at the daily chart, not the same thesis as the SPY. You can see those ATRs are still intact at 429.98, right around that 430 area. And then you have the 55 EMA on this chart at 433.62. So you have a couple of areas of potential support. Momentum still bearish on the volume weighted MACD, and you can see volume coming through on those selling candles, which is not great. But right now the NASDAQ thesis is quite a bit more bullish than the SPY. Moving over to the Russell on the weekly chart, you can see two very bearish weeks in a row here. 2.78% and then 2.82%, big moves down. That's close to $6 on each of those candles of downside potential. Momentum, bearish, RSI breaking down, volume rallying on that move. You can see we hit the 21-week moving average, which is at 197.81. Touch that level, touch the trend line. We'll see if we get a bounce from that level. Critical zone there. If that structure breaks, then you're probably headed down to the 192 area, right around the 144 and 200 SMA. Seems quite bearish at this point. You can see last time we got a roll like this, it did follow through into quite a few weeks of bearishness, and it's certainly possible that this does see a move like that. I don't think we're going to move all the way down to the 162 area, but it wouldn't shock me if we hit 192. And then that 55 EMA sitting there at 186.95. And then looking at the daily chart, you can see it's also quite bearish. Clear topping formation. You did get a slightly higher high on that second peak, which to me means you might see a right shoulder potentially at this critical point. But right now it does look more like a double top, with that second top just being a little bit higher because of the trend line there. You can see we did close below that midpoint, so that's quite bearish. You can see some structure right here. Still looking at that trend line, touched it and bounced a little bit. But if this breaks, then you're right down into that 192, potentially even lower, 198.40 area at the 200-day moving average. Again, momentum and RSI quite bearish. Moving over to the Tasty charts, this does still look okay. You can see it looked really good going into 3 weeks ago, where we were rallying up, hitting that second ATR. It looked like we were going to push continuously up to that third ATR, which is sitting around that 220 area. We didn't get there. We stopped at the second ATR, and now we're selling off back to the mid-range. Mid-range needs to hold up 197.60, again, right in that same region, 21 EMA, midpoint on the ATRs. They're still very much sloping higher, and then you have the ATR stop all the way down at 183.65, and you can see we're continuously getting steps up on this rally. I think it still does look okay. We're just seeing a pullback in time, similar to this move here in December. 3 bearish weeks in a row, and then we got continuation higher for a couple more weeks after that. But more concerningly here, moving over to the daily chart, you can see we did get a reversal of conditions on that Friday session. So we hit that 89 EMA, 198.24 on the daily chart. And then you can see that ATR stop all the way up there at 211.52. So we have a bearish reversal of conditions here on the daily charts, meaning that we could start to see this roll over a little bit more in the coming weeks. Moving over to the Dow on the weekly, you can see these two massive bearish weeks in a row. We closed below the 21 EMA for the first time in a very long time. We broke above it back here at the end of October. You can see bearish momentum. You would expect a couple more weeks of selling. Big breakdown on RSI over the last 2 weeks. Big volume on those two selling candles. If this area breaks, you got the 55 EMA all the way down at 355.82. Doesn't mean we couldn't find some support in here around 375. You can see we broke this first volume profile, second one right here. And then let's zoom out a little bit, see if there's anything in there. Nope, not really. So there's really very little volume in from 375 down to around 350, 355 in that zone. And if you zoom in a little bit, you can see 338, 340 is actually a much bigger support area. So really not a lot of volume in here, and you would expect it to move through there fairly quickly, in my opinion. And then looking at the daily chart, very similar in thesis. You can see these structures in here is rising wedge. It's broken down. Highly traded zone for the daily chart right here around that 375 area. That's going to be critical. Could get a bounce from here, establish a double top or a lower high, something like that. It's pretty deep of a cut for a double top, probably a lower high, maybe around the 385, 390 area. And then you see it continue back lower. We're almost oversold here on the daily chart. Momentum obviously bearish, so that's why it leads me to believe we might see a little bit lower, get a bounce, get a lower high, and then a deeper cut. Moving over to the equal weighted S&Ps on the weekly chart, again, very similar to the Dow, very strong move, but not nearly as deep yet. We hit VWAP at 161.71, but look at this volume on that selling candle. Massive selling, 2.65, and then the volume on that candle, over 55 million on the volume. We haven't seen volume like that in a very long time. We saw 53 million on 11 December, and then besides that, you can see there's really nothing even even close to that level of volume. So massive selling coming off of a new all-time high. So looks very weak. 21 EMA 159.13, and then the highly traded zones all the way down here around 148. So lots of room. You can see there is a good volume profile here around 157. This previous consolidation could absolutely find a bit of a bounce there, but then I would have that same thesis: get a bounce, lower high, continuation lower, probably down into the 150 area. Zooming in a little bit here to the daily chart, again similar to the Dow, big sell-off, closed below all the short-term EMAs and SMAs, looking for support in that previous consolidation. 144 and 200 sitting down around 153, 152 in that zone. I have a level right there, 153. So this is probably going to cut down to the 200 eventually. Again, you can see massive selling on that candle, huge volume on that day. We got one more candle higher after that, and then it just collapsed. So seems like the follow through is definitely happening, and the structure is broken. And then moving over to the Tasty charts here just for a moment, I wanted to highlight that we did hit overbought conditions on the ATR bands. The ATR stop right now is 156.69 on the weekly chart. Momentum has been fading here for a while, and look at that volume spike on that selling candle. Those are usually the kind of candles that tell you you're going to see some pretty strong continuation. And then looking at the daily chart, similar thesis, hitting those upper ATRs. Since then we've broken down. We're almost to the lower band already, 160.88. And then you have the 89 EMA right there at 159.98, so right in that 160 zone. And you can see bearish momentum on the volume weighted MACD as well. So definitely looks weak. And then you can also see, forgot to mention, you have that ATR stop. We have a bearish change of conditions. So the ATR stop right now is at 169.25, which is the first time we've seen bearish conditions going all the way back here to 12 February. Moving over to the ratios, looking at the SPY Russell and NASDAQ SPY, you can see we are seeing some outperformance from the SPY versus the Russell. So this broke out here. We had a little bit of a downtrend, but the Russell is more affected by those higher rates, and it makes sense that it's cratering a little bit more. So SPY outperformance, but it is also notable here. We had been in a little bit of a downtrend for the NASDAQ versus the SPY, and then we got a big up candle here. It is a retest of the 21, which is not super great. That's usually one of my favorite setups. So you got a breakdown, retest of that 21, and usually you get a breakdown from there. But you did see a swing high on momentum. If we can get one more swing high, you would expect that to continue. You could just see a flash one candle, and then this continues lower. Retest of the SMA, that would give you another step lower if you did test it and break down. So something to watch for. Right now, the NASDAQ is outperforming, and it does fit with the overall thesis. Russell stocks are going to be more affected by those higher interest rates, and mega cap tech is actually viewed as a safer stock. They have lots of cash on the balance sheet, and that cash is going to benefit from those higher rates. Moving over to SPY divided by the M2 money supply, you can see we tested that critical level here. So we broke above 24.49, held above it for a couple of weeks, and we are here now. If this breaks, you would be headed to that 21 EMA on the weekly down at 23.68. That would give you some pretty significant bearishness. You can see last time we got into that zone, tested it, got a little bit of a bounce, lower high setup, and then a bigger sell-off. So it makes sense. That is the kind of setup that I've mentioned several times, and that is what I'm looking for a move down, test, lower high, bigger sell, momentum fading, RSI breaking down below the SMA, definitely bearish conditions coming on. And then looking here at the daily chart, you can see that 55 is still hanging in there. So 24.42, this is part of why I think we're going to see a little bit of a bounce here, maybe retest this trend line, get a continuation lower. But right now, all the indicators are bearish, just looking for some buying to come through on those medium term EMAs. And right now, I still think that's feasible, especially with the support level there at 24.49. Moving over to the Mag 7, the Mag 7 is still hanging in there. It was actually positive on the week, 0.09, but momentum still fading here a little bit. RSI just barely below the SMA by just a few tenths. But I wanted to highlight that July move. So you can see in July, we came up here, tested the level, and stocks did go lower during that period, but not nearly as much as everything else. So that top to bottom was about 12%, but you can see we hit that 12% almost immediately, and then the lower lows were barely lower. And then once the market started to rally, then we had mega cap tech leading us higher. So just because we're seeing a little bit of bearishness doesn't mean that people are going to run out of these names. And realistically, I just don't think that it's going to happen. These names are viewed as defensive at this point in basically any environment. So even if this pulls back a little bit, it seems more like a buying opportunity. I would say they're a little bit expensive relative to history, and that is something to keep in mind. But right now, the technicals say we're in consolidation. Could absolutely hold consolidation with a little bit wider range and then push higher. Or even if we had just kind of a sideways choppy market. That's fine for me, the way that I trade as an options seller. So right now, above the 9 EMA at 350, holding that level. I have a level there as well at 349.20. Tested that level multiple times over the last couple of weeks. Couldn't quite get to the highs, which is a little bit concerning, 167.10. And you can see it here. We did get a really strong push from that 149 level, two really powerful candles. I was actually thinking that we might see a bit of a break from there after those two powerful candles in a row. And then we got the move down on Friday, but it is still holding all of those short-term EMAs and SMAs on the daily chart, also holding the highly traded zone. So it still looks okay. Could be just a pullback, hold the higher low and push, but definitely not nearly as bearish as the major indices right now. Moving over to stocks that were moving this week, you can see Nike here up 3.56%. And I wanted to highlight this one because I do think it is a strong risk reward proposition at this point. You can see we came into the zone, tested it here in September, held a higher low and bounced, hit the 200, and we are here now. There's definitely some buyers coming through at that 89.32 level. So 89.32, just a couple of points above that level. You're seeing momentum roll to bullish on the weekly chart. RSI stepping higher. Nike's still a good company. They've been in some trouble here recently, and they are struggling to grow. But right now it does look good. You can see the volume profile, very stable here just below current price. And I think realistically, this could push back up into at least the 100, 110 area. 21 EMA sitting there at 103, 55-week moving average at 106.50. And then if you get a really strong push, the 200 is right there, just like we touched the last time, which is all the way up at 123, which would be a very nice move from here as well. And then looking at that daily chart, you can see coming in, testing, two strong candles, definitely some buying coming through. Sell-off candle on Wednesday with CPI, touched that same zone, and then we got another bounce from that level. I think they got an upgrade from analysts at this price as well. Still have a downtrend line. You'd like to see that break, retest, continuation. Highly traded zone on the daily chart up around 107. So again, I think the risk reward is really strong because you're risking about $3 here for a potential 30-point move in best case scenario. Moving over to Apple and Tesla. Apple was up 4.11% on the week. Big move. We've seen a dramatic shift in sentiment here over the last week. We got back above the 170.90 level, as well as that 176.15 level. And we've seen moves like this where we push back to that 21 EMA. Sometimes we overthrow it and break down. Sometimes we test it and then break down. And then you can see this move here, push straight through it, went back and retested those previous highs, and then eventually broke back down. So still in this sideways choppy market. We're coming off of the low of this consolidation. It would make sense to at least retest that 21 up around 184. Seems like we're headed in that direction, especially because they said the magic words. They said AI. And then if you look at the momentum in RSI here, everything looks like it's set to go at least a little bit higher. And then compare that here to Tesla. We had a move down, bear flag, move down. We didn't hit the price target on that though, and we've been consolidating at that 167.34 level, still holding there. Looks like it can break a little bit higher. Momentum starting to roll to bullish. I think Tesla might be a little bit sold. You can see here we topped out right around $300. We've actually almost been cut in half, bottoming out around 160. So 300 down to 160 seems like Tesla might be a little bit sold here. It's basing off. And if it's going to bounce, it really needs to do it here. Moving over to Amazon and NVDA, you can see not everything in markets looks terrible. Amazon continues to gain here, another 0.5%, all-time highs here for Amazon, pushing above that 188.61 level. You can see trend resistance would be up here around 195, 196. Momentum not showing much, still super overbought. It's been a colossal run here for Amazon. You can see what that looks like, just barely eking out an all-time high, going back here to November of 21, where we flatlined for a long time, and then we bottomed here in December of 22. Massive run over 100%, 130-ish% during that time. And the question is, will this break out to new highs? Right now, it does look like it can, but there was a little bit of indecision at that all-time high. And then looking at NVIDIA here, you can see two bearish weeks in a row. We broke the cycle. We had a slight positive week after we touched that 9 EMA. Momentum still rolling down. RSI still bearish, so not super great. Remember, this is still very much an uptrend. Could just be a pullback in time similar to this, where you get a little bit extended, sideways choppy market, and then a continuation. There's a little bit of concern with China and their chips, but it seems like the AI play is still intact as long as that 9 EMA holds at 855.46. Moving over to staples and discretionaries, you can see staples selling off another big down week, 1.28%, took out the 74 level. So we're pulling back to this consolidation of EMAs and SMAs between about 73 to 73.30. If this zone breaks, then you're looking at the 200 all the way down at 71.25. And I have a level there at 70.85 as well. So this structure has definitely broken down in a pretty aggressive fashion. So We'll see how that plays. Staples pulling back. Discretionaries actually held up pretty well, down a little bit less than 1% on the week. The previous week, they were also down about the same, 2.66 versus 2.75. You can see the momentum is a little bit further along here for discretionaries, and it's not really broken this structure too much. Both of them obviously look bearish at this point. You can see we broke the level. We're below the 21 EMA here as well, which is not great, but it's interesting to see both of these breaking down and discretionaries holding up a little bit better. Moving over to transports and gold, we've been watching these for a minute here. Transports down 2.42%, breaking well below the 9 EMA, below VWAP. You got the 21 hanging in there at 66.85, just above my level, 66.63. Momentum bearish, RSI bearish. Pretty clear double top. Seems like this is set to go lower. And then you got the highly traded zone down here at 65.11. And based on transport theory, the Dow should be going lower with it. And the Dow did look very bearish. And then looking at gold here, you can see this very clear breakout. It's been moving higher, but we did get a long leg doji on it. So pretty interesting. 0.81% to the upside, momentum bullish. You can still see tons of volume coming in here. And I still think gold is set to go higher with the geopolitical risk around the world right now. It is a safe haven for equity, but it is worth noting, look at that massive volume on that Friday candle. Went to a new all-time high. We marked it here at 225.09, and then we sold off really massive all the way down to that trend support. And then we finished that candle basically right at the open from the Thursday session. So really strong wick reversal on massive volume could mean something. But like I said, geopolitically, it makes sense for gold to go higher here. Moving over to breadth, 20 and 50-day breadth moving down massive, makes sense. We saw selling on the Friday session, and that's when most of this move came through. Down to 14.7 on the 20-day, bearish momentum, bearish RSI. Makes sense for this to go a little bit lower. You can see 14.5, interesting zone there. Got very close to that here in October. 7.75 makes sense, at least in the short term. If we hit that zone, maybe we see a little bit of a bounce, but I think the more important level is that 4.5 level. And then looking at the 50-day average, seems like this is set to push into that 26 area. That looks like the most reasonable target. We stopped right at 40. In theory, we could see a bounce. We're pretty low on the RSI relative to where this chart typically gets. We don't usually see oversold conditions. It does happen occasionally, but not that often. It would make sense for this to get into that 26 area in my opinion. Moving over to 200-day breadth. Again, we did see selling over the last 2 weeks. We did break below 76 and we closed technically below that 69.38 area. We were right on top of it, but like I said, technically it is below. Momentum bearish, RSI bearish. And looking at the levels here, I think we could probably get down to this 62 area that marked the tops back here in November before we had that short-term dip. Similarly here, important level, short-term dip and then rally through. Seems like we're probably going to get into that zone and then see a short-term rally. And then I do want to highlight the daily chart here since we don't talk about it all of the time. You can see that consolidation breakdown, 3 bearish candles in a row, breaking that level. 200 SMA sitting down around 60.65, so between that 62 and 58.9 area. Momentum bearish, RSI almost oversold already. It's not uncommon to see oversold on this chart. You can see here, big move down, oversold conditions, slight bounce, and then we fell right back to oversold conditions, slight bounce, more oversold conditions. So just depends on the move. Obviously, this is a long time. This was July of 23 all the way here to October of 23, and that was a very deep low, and then we started to see that rally coming through. But it seems like this has culminated. We've been here a while, and it's starting to break down. Moving over to the 2-year and the 10-year yield, you can see both of these went higher on the week, 3.11% and 3.27%. So we're still not quite getting towards that normalized condition. Both of these are set to go higher. It seems like the 10-year is going to head back to that 5% area, which would be the most recent top here that we saw back in October of 23. Markets were trending pretty hard to the downside during this upswing. And markets really haven't come to terms with this breakout yet on the 10-year, in my opinion. And then you can see the 2-year similarly breaking out. Seems like it's headed to that 5.25 area. Moving over to the dollar was up a lot, 1.66%. Big move higher, makes sense. With yields going higher, so too does the dollar. And as the dollar again is pushing back into those October areas, right at that 1.68 level, that was when markets were trending down pretty decently. Dollar was headed higher, and we have a clear breakout of the dollar going higher, holding well above that 104, breaking above 105.5. Been talking about that as a price target for a while. Momentum and RSI pushing higher. Trend could act as a little bit of resistance, but you can see right here, it's pushed through it several times. Seems like it's going to push through it. And realistically, we held a higher low with these most recent lows relative to the low in July. And if that pushes higher, you should expect a higher high, and that could even push us up to that 108 zone. And if that happens, markets are absolutely going to be headed lower. So on the macro environment, we're seeing things that should push equities to the downside. Moving over to bonds, you can see high yield bonds finally broke down. We've been in this consolidation since about the second week of December. We've been moving sideways. Look at all of that consolidation. Now we're pushing through this zone. You wouldn't expect to find any support until 93, maybe even as low as 92.50. And if junk bonds are headed lower, it makes sense for the markets to be headed lower as well. You can see momentum in RSI breaking lower. And then looking at J&K, also down 1.2%. Makes sense with yields going higher. Big volume on those down candles. To me, that means there should be a little bit more selling. You could potentially find some support at 98.16. You do have some trend support in there as well, but seems like this is set to go lower. And especially if the 10-year continues to break higher like it is, this could head all the way back down to that 82.60 area. Moving over to volatility, I just wanted to highlight, you can see the MOVE index on the daily chart at a critical zone, 144 EMA and 200 SMA. If this breaks higher, that would fit with the thesis of J&K and TLT continuing to sell off. We've had a big move. Seems like it's going to go higher in my opinion. And then looking at the VIX, again, we saw this push up, higher low, rally up, hit that 18.5 area. Is that the end of it? Probably not. What would be your next level? Probably 22.5. If we pushed up into those zones, that means markets are set to go lower quite a bit. Didn't hit overbought conditions yet. We held that SMA test. You can see it here on the RSI. Big move up, retested the zone, pushing higher in my opinion. So 20 is your next level. Above that, 22.50. Moving over to my accounts, you can see I was positive on the week. So about $800 positive on the week, which is good considering that the NASDAQ was down overall about 0.5%. And the IWM was down even more. So continuing to play defense and still make a little bit of money. I'm definitely in a defensive position here going into the Monday session. You can see some puts on here. I'll probably end up rolling those down and out in the Monday session, especially with the geopolitical stuff we've been seeing already. Then I have some calls on here at 441 for the Tuesday session, so providing a little bit more protection for my puts. And then similarly here on the IWM, 199 calls for $1, collecting a little bit more than 0.5% there. It's in a little bit of a losing position, but it did fall quite a bit after hours. You can see we're at 71 cents, then finished somewhere around 21 cents. So seems like markets were going lower after hours. Similarly on the Qs, you can see the ask was at 437.25, so potentially up to $1 lower. We'll see how it opens for the Sunday night futures, but right now playing some defense and probably going to be more defensive on the Monday session. Let me know down in the comments section what you think of the Iran-Israeli conflict. Will it escalate, or will this just be a one-time event and markets will recover? Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.